These are your Central Florida real estate numbers that cover May, which really cover till the end of April. First quarter done, now into the second quarter. Inventory's been building. Lots of press, nationally anyways, about Florida having growing inventory. So see, is that affecting the market? It's affecting prices and what's likely to happen throughout 2024. Hey everyone, this is Rayce Robinson, your favorite Florida mortgage broker. And do me a favor, if you think this video is useful, or anything that I cover in the Central Florida real estate market or real estate market in general, like it, subscribe to the channel, all that good stuff. Anyways, let's look at the numbers here for Central Florida. So I like to look at a few key numbers. So year over year, look at inventory. We had 9,376 homes right now. In April of last year, we had 5,148. That's an 82% increase in inventory. So that is a substantial increase in inventory that we have kind of leveled out. If you look here, last month into April, really up 4.5%, staying right in this high 8 to low 9 in inventory. Closed sales, really not budging, right? 2759, 2766 last year. Right now, last month about 2559, so sales increasing a little bit. These are the big things, though, that I really look at as both in the market, as a real estate investor, and talking to potential home buyers. It's average days on the market. So we're at 54 days. Last year, we were at 52. When you look right here, 58 days on market falling. And then on top of that, months of supply, 3.4 months. Look what we had last year at this time, 1.86 months of inventory. That's where we have just some record low months. If you look back in the history of just inventory, it's such a low number. So that's why we have these big increases, because inventory was so low. And inventory month did fall a little bit. Months of supply fell from March to April. So when I look at those numbers, what I see is the market really stabilizing in this 3 to 4 months of inventory. As we go through the summer, sales pick up, so that'll make months of inventory fall. As sales go up, we'll see how many listings pop on the market. Again, really still dealing with this lock-in effect where we have so many sellers that just have ridiculously low rates, not really wanting to put their home on the market. And so we'll see what happens throughout 2024. Are people going to want to give up those 2, 3, 4% rates and get higher rates? Now, if rates were to fall, and we'll look at that, that can make a big difference. But right now, that's not really the case. Some other things here that are interesting to look at is I like to look at median home price. Again, up 386.5, up 388.5. In fact, on this chart here, I meant to look at this. Look at median last year at April this time. This year, 388.5, meaning price homes are just continuing to go up. And then I also like to look at distressed home sales. So we have 26 distressed home sales, which is super low. It is obviously an increase at 13%. And across the nation, there have been some areas that we do see foreclosures starting to go up to higher levels, but I wouldn't say dangerous levels. But here in Central Florida, really distressed sales not really a thing, at least not at this time. And then let's kind of look at the broad picture of the market here. So we have average rate at 6.9%. We'll look at rates here in a second. 9,376 total homes for sale on the market. We have, of that, 6,500 or so single family homes, 1,888 condos, 982 townhomes. Again, sales closed, 2,759. Days on market starting to fall, which is not good if you're a buyer, just meaning the market is getting more competitive. And then looking at national rates, you can see really this kind of up and down. April 2023, 6.4, climbed all the way up to almost 8% in October, fell back down in January, and now back over 7% at the time I'm doing this video. So again, what we have is higher rates, which makes less demand, and people, obviously, if you're a first-time home buyer, stuff like that, have harder time getting into the market because obviously we're all payment-driven. At the same time, again, people with record low payments actually not wanting to trade that equity in, and so they're just keeping those homes kind of on the sideline and just sticking with the house that they have because they've got really low rates. Now, that being said, look at this article here from, I believe this is the Sentinel, but local Orlando area home prices are reaching record highs. And this article is going on to say kind of what I was just saying. The prices are still continuing to climb. And then at the same time, this is an article from Redfin just talking about nationally. U.S. prices hitting an all-time high. Again, no, it's just supply and demand. I've heard a lot of people over the years argue with me about there's going to be a pricing correction, and logic being that median price has kind of become detached from median income, and I would agree with that. But if you move to California, median income has nothing to do with median price. It's just expensive to own a home in certain areas. In Florida, very desirable, more people moving in and moving in and moving in, just continuing to drive prices up. And that's a trend, I believe. I don't have a crystal ball. Don't get your financial advice from me, but I do buy and work with a lot of real estate, and I think this is the absolute one of the top markets to buy in. I'm not the only one. We have hedge funds and all kinds of people buying into the market. And then if you look here at rates, just real quickly, 30-year rates, this was that high in October I was talking about, came all the way down, all the way back up to 7, and you can see we're on this downward trend. So all that's good news. I mean, I think in general rates are likely to fall throughout this year. But with that being said, no one really knows, what rates are going to do. I mean, obviously, if you look over the next couple years, rates are going to be lower. Fed, I believe rates will be, once they start trickling down, and they have. I think once we get a couple good, maybe CPI reports, if we get unemployment a little higher, you're going to see that interest rate start to fall because Fed will be pushing that rate down. But at the same time as well, we are going into the summer where we have more sales, and then we have 100% down loan programs that are going to drive more buyers in the market. Let's face it, if you can get in for almost no money, that's going to make people buy. And that's actually what's going on right now. Hometown Heroes have a 100% program. We have this bond program. I'll put a link to that in the description. I want to go over loan programs on this. But just know if you're a buyer, there is some incentives right now to get in the market. Rates are a little lower. And as we get in the summer, the competition will get busier. So if you're a homeowner, still looking good. Prices still staying steady and really going up. If you're a home buyer, back to the same news. It's not as crazy as a market. You might not necessarily be competing, though. I was talking to a buyer today that was putting an offer, and there was already 11 offers on the house. So in certain areas, still a lot of activity. So if you're a buyer, no reason to wait. Get in the market. Take advantage of these programs. We'll see as the summer goes down. I really think that days on market is going to fall. Inventory is going to fall. But I don't think it's going to change drastically. I just think you're going to get this slow trickle up on appreciation and a slow trickle down on rates. We'll see. Anyways, as more information becomes available, moves the market, as always, I'm going to cover it right here. If you have any questions on this, loan programs, whatever, reach out to me. I'd love to help. This is Rayce Robinson, your favorite Florida mortgage broker. Talk to you next month.